This show is intended for general purposes only, as individual situations may vary. Statements made should not be relied upon as recommendations or solicitation. When discussed, past performance is no guarantee or indication of future results. Nelson Financial Planning offers security through Nelson Ivest Brokerage Services, member FINRA, and SIPC.
Good Sunday morning. This is Bud Hettinger. Next on News Radio 102.5 WFLA, the longest-running radio show in Central Florida, Dollars and Cents, with my good friend Joel Garris from Nelson Financial Planning. You can call him at the office this week at 407-629-6477 to schedule your free consultation to discuss your retirement plans. Or you can talk to him right now at 407-916-5400.
Good morning, ladies and gentlemen. Welcome to the program Dollars and Cents. My name is Joel Garris. We're with Nelson Financial Planning during the week, but here on Sunday morning, we're coming to you live from the News Radio 102.5 WFLA studios. Also simulcasting to our friends over on the AM dial at 540. The program aptly titled Dollars and Cents, where we help you make sense out of the many topics that have anything and everything to do with your dollars. Got a packed show today, as we do each and every week. We're going to talk a little bit about volatility and one of the statistics that we saw this past week, which is just one more piece of evidence that continues to pile on to our investment thesis, which is you're never going to be able to time the market. The market has an inherent level of volatility, but it also has an inherent level of times when nothing really is happening. And we've got some statistics that really underscore that. And then we'll talk a little bit about the midterm elections. Might be a little early on that, but we want to get you thinking about that. We're certainly going to hear much more of that in the months ahead. Some interesting statistics looking at past midterm election years. I think you'll be very intrigued by what past history tells us as to what happens in the midterms. And then we're going to talk about millennials. Been actually talking about millennials a bit of late, but saw a statistic about their investment approach, and it kind of shocked me. So we're going to talk again specifically to the millennials that hopefully are out there listening to the program. That would be anybody aged 25 to 40. And we're going to really pose a pretty tough question to that group because there's some statistics that are coming in terms of their investment allocation and investment strategy that really is a bit of a head scratcher for sure. This past week, another busy one at the office. We had night 2 of our client appreciation events where we took over the restaurant Booyah Gastro Bar right close to the office. For those of you who are longtime Central Floridians, you would know the location as the former location of the Mount Vernon Inn, and if you dared to venture in, particularly on a Friday and Saturday night, to the Red Fox Lounge, then you've probably got some interesting memories. But that's where it was, right around the corner from the office. We did it a week ago Thursday, and then, of course, we did it this past Tuesday. Just our way of saying thank you to our clients. So that was the week past. Looking ahead, it's not necessarily stuff going around the office that's going to keep me entertained. We have an event of sorts coming up on a personal basis. My youngest will be out of elementary school. Man, I just find that pretty hard to believe. But Connor graduates from 8th grade, graduates from the Christ School from downtown, graduates on Thursday. So next year, I won't have to worry about taking anybody into school. I guess that's the upside, right? The sad side is that all the kids are getting older and it'll soon be pretty quiet around the house. But next year, I won't have to worry about taking anybody into school because I will have at Boone a senior, a sophomore, and a freshman. And actually, on the first day of school, I will be sending off a senior, a junior, a sophomore, and a freshman because my wife decided it would be a little interesting twist with a house full of boys to have a temporary daughter coming up here in August and for 4 months. This past year, we were a host family for the Rotary Youth Exchange, had a young gentleman, William, very nice young man from Denmark, at the house for 4 months. And that program is a year-long program. They rotate through 3 different houses, so 4 months over that 12-month period of time. So we were kind of the middle leg for William. So next year, well, not next year, in August, during the next cycle for the Rotary Youth Exchange, we will be a host family for a young lady named Paula from Germany. And so that'll change up the dynamic quite a bit. And so on the first day of school, we will wave to a senior, a junior, a sophomore, and a freshman. That'll be interesting. That'll be a lot of lunches to pack and a little bit of different timing around the house. So needless to say, we're going to enjoy summer and sort of gear up to that gradually. But yes, big comings and goings. Connor graduates from 8th grade on Thursday and is ready to go off to high school for sure. Also, looking ahead to next weekend, it's Memorial Day weekend. We're going to do a special show featuring a senior investment personnel from MFS, Massachusetts Financial Services. It's a guy by the name of Brad Rattan. If you've been a client of the firm for a while, you know Brad because we've had Brad come down and speak to us on a couple of different occasions. And so we're going to be actually doing a program with him that we will be airing next Sunday during Memorial Day weekend. So look for that program because that should be pretty interesting. We don't often have a special guest on the program, but we're trying to do that a little bit more because it always is a little nice to have a little bit more of a conversation. So we're going to have Brad on the program with us next week. So that should be interesting. We're going to ask him a lot of questions that involve how the investment management, how active managers, how portfolio managers actually do what they do. So that should be somewhat of an interesting program for next week. Looking back to last week, beyond the Big Booyah event, the Supreme Court, in its infinite wisdom, managed to grant another way that you can be distracted from your financial goals. Of all the distractions that are out there that prevent people from saving enough money for retirement or saving enough money to help pay for college or saving enough money to help pay for their medical expenses, there's a host of distractions. Well, guess what? The Supreme Court added one more. Because now you can bet on sports all over the world, all over the country. Isn't that great? That's exactly what people needed. We don't have all this stupid cryptocurrency nonsense going on out there that's getting everybody's attraction. Let's add another layer in so that people can be parted with their hard-earned money. 6-3 Supreme Court decision overturned a 26-year federal ban on sports betting outside of Nevada, allowing other states to enter the business. Good news if you're in New Jersey or in New York. Maybe now you can balance your budget, okay? Maybe you should have probably figured out what your expenses were and lived within your means, but oh well. I guess sports betting will solve all of those problems. That is for sure. Past week, markets basically yawned. Not much of a movement. I think a little bit of a dip down of about 0.5% if you look at the major averages. So not too much. Earnings season pretty much wrapped up. This coming week ahead, you're going to hear much more about trade. A couple of weeks ago, we did a pretty extensive program on trade and kind of the shifting parameters of trade and how much traditional trade has changed since it was 20 years ago. Much more about data, not necessarily about washers and dryers and things like that. So we've got the NAFTA, the North American Free Trade Agreement, that will continue to make some headlines this coming week as they go through round of negotiations. Also this week, we may see some changes to the Dodd-Frank financial legislation. Dodd-Frank was passed in 2010 in reaction to the financial crisis. Many of the parameters in there probably overcorrected, probably overshot, as is typical in Washington. Something happens, there's a bit of an overreaction. So this legislation that might very well pass this past week would go towards pulling back some of those regulations. So that's the week that's passed. That's the week ahead. So we will see how all of that plays out in the week ahead. We'll slide to the break. When we get back from the break, we're going to talk some about midterms. Got some interesting stats on midterm election years. Hopefully you will find that fascinating. Stay tuned through the break for that conversation here on Dollars and Cents. This is Joel Garris on News Radio 102.5 WFLA.
This is Bud Hedinger. You know, you can talk to Joel Garris of Nelson Financial Planning right now on Dollars and Cents about anything to do with your money by calling 407-916-5400. Give him a call. It's time to make sense of your dollars.
Welcome back to the program, ladies and gentlemen. Dollars and Cents. This is your host, Joel Garris of Nelson Financial Planning. This segment of the program, we're going to talk a little bit about midterms, not midterms in school, but rather midterm elections coming up in less than 6 months. On November the 6th of this year, we will all, and hopefully we will all, turn out and do our civic duty and vote. So, what will that mean? On November the 6th, all 435 members of the House are up for re-election because the House, they only serve 2 years, so they constantly are up for re-election. The Senate, because they all serve 6 years, it's kind of like a rolling 2-year thing, so a third of the seats are up for grabs in the Senate. So 33 Senate seats are up for re-election. Unless you've been living under a rock, you know that one of those 33 is actually here in the state of Florida. Already seeing the ads out there. The last 4 midterm elections, so that would be 2002, last 4 midterm elections. So midterm meaning in the middle of a presidential term, not the ones that occur when we have a presidential election, but rather specifically the midterm years. So that would be 2002, 2006, 2010, 2014. Those would be the last 4 midterms. the balance of power, Democrats versus Republicans, changed in at least one of the two congressional institutions, whether it be the House or whether it be the Senate. So the past four midterms, you've seen the D flip to an R or an R flip to the D in at least one of the chambers of Congress. So you don't have to be a big fortune teller to say, well, if that's kind of the general pattern, perhaps we would expect to see that. And certainly there seems to be some tea leaves out there that would suggest that the House may very well be the one that flips from an R to a D. Usually midterms are very good for the party that has been out of power. Now, here's a deeper dive on some statistics for the midterms. So, when you have midterm elections, obviously there's a level of political uncertainty that historically, looking at midterm election years back to 1962, so that would be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 14. Okay, so of those 14 midterm election years since 1962, generally there has been a sell-off early in the year. Okay, much like what we saw in February for this year. So this is kind of interesting. If you look at those 14 other midterm years since 1962, where you would see early in the year a bit of a sell-off in the markets. And then the next three quarters, so the first three quarters of those midterm election years, historically, the markets are relatively flat. So far, that pattern for 2018 seems to be holding very much with the historical numbers looking at previous midterm years. Now, here's the good news. Once it gets close to resolution, the stock market has a tendency to breathe a sigh of relief. So looking at those 14 midterm election years since 1962, for the fourth quarter, the S&P 500 index has averaged about 7.5%. So that's pretty good. If you were flat for the first three quarters and then you wind up 7.5%, then you finish the year pretty much in line with kind of the historical averages. October being the best month as the tea leaves start to get to be a little bit clearer for the November elections. October being the best month. Even further out, if you look at the returns 1 year after, we'll give you two different numbers here. So since 1962, again, looking at those 14 years of midterms, the S&P 500 index was higher 1 year after the midterm year trough. So that statistic's looking at, okay, going back to the sell-off early in the year, the low point of that sell-off within a year after that midterm year trough, average return 31%. That's a pretty good number. Furthermore, the report and the analysis that we're looking at here says once the midterm election takes place, the index has been higher 1 year later every time since 1946. So a lot of conversation about midterms. Look, folks, it's just starting. As we get closer to the midterm date of November the 6th, we're going to hear much, much more of it. Already starting here in Florida to see some of the ads. We're going to see a lot more of that. The reality is that you're going to hear a lot of the media fanning the flames, if you will, that, oh, no, it's just going to be a very difficult time. remember the historical perspective that you heard today on the program. I am sure we will repeat it going forward, particularly as we start to get closer, but we wanted to get the analysis out to you right after we saw it, because it certainly is some interesting numbers that helps to bring it into perspective. Past 4 midterms have seen a flip. No reason to not expect that here on this one. The year so far, interestingly, seems to be following the pattern of the 14 previous midterm elections, which were marked by, number one, an early sell-off in the markets, much like we saw in February, and then the next 3 quarters basically just kind of trending sideways, and then watch out for the fourth quarter, because that's pretty much where you made most of, well, nearly all of the money for the year if you go back to those 14 other midterm election years since 1962. So we shall see whether that plays out again this year, but certainly always nice to have some history on our side, particularly with the markets effectively acing their midterm elections exam. So interesting stuff there. I'm sure we will touch on that more in the months ahead. Hard to believe that all of that stuff is less than 6 months away. It's coming right up. It'll be here before we know it. So some interesting statistics on midterm elections, which segues very well into some of the numbers we wanted to share with you about volatility and actual market performance. And every time we see statistics and numbers and things like that, it just really goes as one more piece of support for our fundamental investment thesis at the office, which is that you ain't going to time the market. The best course of action is to be consistent. We'll share with you those latest statistics that we saw when we get back right after these messages here on Dollars and Cents. This is Joel Garris, News Radio 102.5 WFLA.
This is Bud Hedinger. You know, you can talk to Joel Garris of Nelson Financial Planning right now on Dollars and Cents about anything to do with your money by calling 407-916-5400. Give him a call. It's time to make sense of your dollars.
So congratulations to Florida. I don't know if you all saw this, but Florida, along with Colorado and South Dakota, was recently named as one of the top 3 states for retirement in 2018. Interesting survey, looked at a bunch of different things, most importantly affordability, quality of life, weather, and the state's tax environment. But congratulations to Florida, right? And one of the top 3. Colorado, I think, would be kind of interesting, right? But I'm not sure about South Dakota. There's probably not a whole lot going on. Plus, the weather out there can get kind of a little tricky. But congratulations to Florida. Hey, we made the top 3. That's pretty good indeed. Welcome back to the program. This is Dollars and Cents. I am Joel Garris of Nelson Financial Planning. We're going to talk a little bit in this segment about volatility in the markets. And the simple fact is that despite what the media would have you think, that the market is sort of always constantly in flux, the vast majority of the time, it just kind of bounces up and down by a little bit on a daily basis. And nowhere is these statistics more strong than when you start to look at those best days for the markets. If you look, for example, over the course of the past 10 years, the top 50 percentage gain days, only one has occurred in the last 6 years. Similarly, if you look at that same 10-year period of time, the total return for the S&P 500, just by being consistent and investing and leaving it alone, your annualized return would have been about 8.5% per year. That's a decent number. If you missed just the 10 best days over that 10-year period, so basically 1 day a year, the 8.5 annual return drops all the way down to 1.3. Stop and think about that for just a second. Okay? Looking over the past 10 years, the annualized return 8.5, just buy and hold and don't get distracted by what the media would like you to be distracted by. Missing just the 10 best day, 1 day per year takes your return from 8.5 and drops it all the way down to 1.3. Boy, I'll tell you, if there's not a stronger statistic for the wisdom of being a consistent investor, I don't know what is. It's just, there it is, right? It's pretty strong. Similar numbers, best 5 trading days. Now looking at the best 5 over that same 10-year period. So the very best days, 5 best days over that same 10-year period. Those days were responsible for over half of the total return than the other days combined. So if you take the top 5, the best 5 days over the course of the past 10 years, over half of the return comes from those 5 days. Less than half of that return came from the other 2,513 trading days in the same 10-year period. Folks, when you hear these numbers, they really do have to make you stop and think, my goodness, how am I going to know when to get in and when to get out? And the answer is you're never going to, because the market moves very quickly in short periods of time. And I think we always hear about the negative part of that, but there is, in fact, a positive side of that as well that ultimately generates the lion's share of return over time. The best way to ensure that you get that is to be consistent and to stay invested. And as much as you can, try not to get too distracted to what the financial media and the media in general would have you focus on. It is dramatic how much damage you can do to your investment return thinking that you're going to hop in and hop out of the market. It's just crazy when you hear these numbers. You know, if you look at 10 years and you miss 10 days and the return goes from 8.5 to 1.3, stop. That's dramatic. That's the annualized return, folks. That's not just the return for the particular year. That's the annualized return that literally drops to be less than 15% of the total return that you could have gotten over the course of the decade. But my goodness, all it takes is to get distracted a little bit. And when you stop and think about investing, and I think often when people hear be consistent, stay invested, I think many out there think, well, that's just far too simplistic of an approach. Unfortunately, though, there's statistics like this that say, how could it be any other way? How could you have any other approach? You think you're going to sell and then buy and then sell and then buy, and anybody that professes that they've got that discipline all figured out, well, good luck to you. because that's not what the numbers say. 10 days out of 10 years fundamentally changes your return to only be less than 15% of what you should have gotten. That's 85% that they're going to have to somehow make up because of their strategy of getting in and getting out. We urge people not to do that. But boy, there's a lot of distractions along the way, particularly when you start to look at investment allocations and what people still look at in terms of potential for return. Only 26% in a recent survey, only 26% of Americans said that an investment in stocks is their top long-term choice for investments. They're the best option, or the perception of the best option. Only 26%. What in the heck were the other 74 picking? I don't have any idea. But only 26% said. Meanwhile, if you look at the historical numbers, there really isn't anything better over the course of the past 10, 20 years. So not sure what the other 74% were picking, but good luck to you. Maybe they were looking and getting excited about the legalization of nationwide sports gambling. Maybe that's how people are going to be supplementing their retirement, is that they're going to become prolific gamblers now that that is now available across this great country. Man, just another thing to separate you from your dollars so you don't have that much for retirement. Anyway, speaking of retirement, we're going to spend the next segment talking specifically to the millennials out there, because there's some statistics that are coming out in terms of their investment allocation that is pretty troubling when you hear the numbers. So we will cover that topic, but we will slide to a break first and then be back after the break. Here on Dollars and Cents, this is Joel Garris, News Radio 102.5 WFLA.
This is Bud Hedinger. You know, you can talk to Joel Garris of Nelson Financial Planning right now on Dollars and Cents about anything to do with your money by calling 407-916-5400. Give him a call. It's time to make sense of your dollars.
Welcome back to the program, ladies and gentlemen. Dollars and Cents here on News Radio 102.5 WFLA and simulcasting over on the AM dial on 540 AM. Hey, here's an interesting statistic. Congratulations to the U.S. government. They, for the month of April 2018, ran the largest monthly surplus in U.S. history. Wow. Of course, April is when taxes are due, so they collect a whole lot more money in April. But at least for that month, they were running pretty well. $214 billion surplus in April of this year, the largest monthly surplus ever in U.S. history. They probably already spent that surplus now. It's May. That's the unfortunate part. Speaking of numbers from April 2018 had a jobless rate of 3.9%. I'm sure you saw those headlines, but obviously 3.9 is less than 4%. To put it into perspective of how rare it is to have an unemployment rate at less than 4, if you go back over the course of the past 40 years, so that's 4 decades, you will only find 6 months where the unemployment rate was less than 4%, at 3.9% or less. Lo and behold, April of this year, 2018, 3.9%. That 6 months out of the 40 years represents about 1% of the time where you would ever see employment at 3.9% or less. So certainly some interesting numbers, particularly when you look at the current state of the economy, specifically the unemployment rate, incredibly low for sure. So we'll talk now to the folks that are between the ages of 25 and 40. So if you are in that age group, or if you know somebody that is, here's a conversation that you can have with them. 37% of American adults under the age of 35. So this survey, this is actually a Gallup poll. So millennials go up to 40. So this is actually looking at 35 and below. So 35 and below. Only 37%. Golly, that's just barely a third. Are invested in the stock market today. How much has that dropped? It's dropped quite a bit. In 2002, that number was 55%. Stop and think about that. In 2002, 55% of Americans under the age of 35, so 18 to 35, 55% were invested in the stock market. Today, that number stands at 37. Goes back to the other statistic that we were sharing. What are you investing in? Number one. Okay. Number two, my goodness, has the media caused that big of a distraction that even the youth of today think that an investment in those large blue chip companies that make the goods and the products and the services that the world uses every day is just not worth it? That somehow there's not going to be return there as they do their Instagram and shop from Amazon and look at Microsoft and use their Samsung or Apple phones. I mean, that's pretty disturbing, and certainly a worthwhile conversation to have. If you're in that age group, we would encourage you to look at your investment allocation. Here's a scary thing, too, as an aside, and certainly we've talked about this in the past. Those target date funds that are being force-fed to the public at large, particularly in the 401k platforms, even the target date funds that go out like way to 2050 or 2055, what you will find is even those funds aren't all in the stock market, which I don't know why they wouldn't be, but they're not. So be careful of those funds, but particularly look at your investment allocation and make sure that you haven't wound up in some kind of a default money market or similar type of option. Only about a third actually have investments in the stock market today. That is down substantially from where it was in 2002 at 55%. And guess what? It's much easier to invest now than it was in 2002, right? With all the different platforms and options and access that's out there. You can't tell me it's more difficult to invest today or more difficult to set up an account today, 2018, than it was back in 2002. It's a lot easier to do it in today versus 2002. First of all, in 2002, you couldn't download the applications off the internet because the speeds weren't fast enough. You couldn't email that. I mean, it's unbelievable how much easier it is today than it was in 2002, and yet the numbers are dismal. 55% of Americans under the age of 35 were owning stock investments. That is all the way down to 37%. So if you're in that age group, we encourage you, please look at your investment allocation. If you're putting money aside for retirement and you're 30, my goodness, that's 35 years. You've got more years in front of you to retirement than you have years behind you that you've been on this good planet. If you have children in that age group, we encourage you to have that conversation with them. It may not be something that they want to bother to look at, but the longer you go with ignoring it, the harder it is going to be to catch up. So you really want to encourage your kids, particularly those in that age group under 35. There seems to be a much bigger misallocation of those resources than there ever has been in the past. So really encourage and have that conversation and encourage your kids to take a look at what it is that they own and make sure it's appropriate. If it's in an IRA or 401k or a 403b or a 450, I mean, something that they're really not going to use until retirement age, which for most of them is going to be 65, maybe even higher than that, then that's a pretty long period of time. And certainly they need to be 100% into the stock market. I would not really, for a retirement account that you really shouldn't be using, you've got to take a look at that allocation. So we encourage you to take a look at it if you're in that age group. If you know somebody who is, a kid or a cousin or whatever, we encourage you to have that conversation with them to make sure that that investment allocation is where it needs to be. It is always shocking when you look at these numbers just how little is being put in the markets today in comparison to the percentage from 10 or 15 years ago. So beware of that. So as we look ahead to this week, as we mentioned at the top of the program, busy week personally. We've got Connor's graduation coming up from 8th grade, so that should be fun. And then the school year is sort of winding down. Hard to believe it here in Florida. It's one of those things that I can never quite get used to, having gone to school up in the great state of Maine. It was always, you had to get through Memorial Day, you had to get into June. And these days here in Florida, school, or at least for my youngest, wraps up before Memorial Day, which is, of course, next weekend. I think my older two do have 1 or 2 days after Memorial Day that they're supposed to report, but they tell me from prior experience and years that there aren't many reporting in to the public school system after Memorial Day. So it kind of makes you wonder why you bother with those 2 days. But anyway, the law rule requires it, I guess. But not many are showing up on those days, even though they're supposed to. So busy week ahead. Next week on the program, we will be doing a co-host with a good friend of ours by the name of Brad Rutan. He is an investment specialist, portfolio analyst for Massachusetts Financial Services, MFS. He has been with us before for our regular client events, doing presentations and things like that. So we're excited to have him on the program with us next week. We'll be talking about all of the different things that a professional portfolio manager, professional investor does on a regular basis. We'll also get his reaction to some of the headlines of the day, the economy, the midterm elections, and all of those types of things. So we'll look forward to having that program next week on Memorial Day that we will be doing with him. So stay tuned for that next week here on the program. We are out of time, so we will wrap it up. Hope you all enjoy the rest of your Sunday. You've been listening to Dollars and Cents with Joel Garris on News Radio 102.5 WFLA. How have your investments performed over the past 5 years? Do you know? Are you happy with that number? At Nelson Financial Planning, we've been achieving investment results over the past 30 years using actively managed investments that we own personally. This is Joel Garris, and I invite you to review your investment results with us. Visit nelsonfinancialplanning.com or call us today at 407-629-6477 to set up a conversation to review your investment performance. That's nelsonfinancialplanning.com or 407-629-6477 to set up that conversation.
A-plus Better Business Bureau accredited. Nelson Financial Planning offers securities through Nelson Ivest Brokerage Services. Member SIPC and FINRA. Listen to Joel Garris on Dollars and Cents every Sunday at 9 a.m. on News Radio 102.5 WFLA. This show is intended for general purposes only, as individual situations may vary. Statements made should not be relied upon as recommendations or solicitation. When discussed, past performance is no guarantee or indication of future results. Nelson Financial Planning offers securities through Nelson Ivest Brokerage Services, member FINRA, and SIPC.